Hello traders, welcome to ChrisFX. This video is how to trade the breaker block part 2. Since this was a very much requested sequence to the first video, I decided to make a part 2 in order to satisfy you, my precious viewers. And I will start today by showing you a small trick. So the first example that I'm gonna show you is a small trick that you can use with a fair value gap, and then I will proceed to the breaker block. So I'm adding more and more tools into your trading arsenal, which if you backtest properly, you will be able to make the best trading decisions ever. And before I proceed, make sure that you are backtesting everything I'm teaching here on ChrisFX with fake money. I cannot highlight this thing enough. Okay, so how am I using the breaker block? First and foremost, I'm starting with a higher time frame. This time frame in this occasion, in this example that I'm gonna show you here on Euro US dollar, is the 4-hour time frame. What do we see with this impulsive movement? When you see movements like this one, where we close above an area and close very impulsively below it, we know that liquidity has been grabbed. What have we left behind now? We have left this beautiful fair value gap on the 4-hour time frame, which is an area that has not been filled in yet. On the top right of your screen right now, you can check out the previous video about the fair value gap, and then you can proceed with this video so that we are all on the same page and that you understand exactly what I'm teaching right here. By the way, the blue zone is the ChrisFX area, which I'm teaching only on the ChrisFX Academy, which you can also join by clicking on the link down in the description. We were expecting for price to come back into this area. It didn't quite tap on the ChrisFX zone, still we saw this beautiful retracement inside the 4-hour fair value gap. Let's now scale down to a lower time frame when price makes it into this area, and this time frame is nothing else but the 1-minute time frame. And here is where I'm gonna show you the first trick, and I will proceed with the breaker block example and what makes a good breaker block compared to one that might not hold. First and foremost, we saw an impulsive break of structure, which at the same time constitutes a change of character here on the 1-minute time frame on Euro US dollar within the 4-hour fair value gap. Now here is where the trick comes. Let's say that you didn't get this first entry around this area, let's say, and that you want to enter later on. So I'm gonna play price action just a little bit, and then I'm gonna show you this magic trick that you can be using from now on. Okay, let's say you didn't enter right here, and there you go, we break structure one more time after retesting this fair value gap. What you can see now is that we left a second fair value gap, which is this whole area right here. But if you pay close attention, there is another tiny fair value gap inside here. You see this one? This is an extra confirmation for you that you can enter exactly from this area that coincides with this huge fair value gap. In this occasion, you can just enter right here. This is the trick, this is not the breaker block. I just give you this extra trick for your trading arsenal, and you can just place your stop loss above this candlestick right here, and you can target first target over here 2.5 to 1, second target let's say down here, and so on and so forth. Let's see how this would have played out in this occasion. There you go, you see how much to the pip you get activated. This was the trick that I wanted to talk about. When there is a fair value gap from the one side which has not been filled in, and then you have another fair value gap from the other side, price more likely than not is gonna come and tap into this first fair value gap, which coincides with this whole area. You see how precise this is, and this is not random. This is absolutely not random, as you can see it right here. The precision of this thing. So you can do that with a stop loss above this candlestick as you see it, and then you will close first profit over here. We just got the first profit, second profit down there, second profit smashed as well. Okay, this was the trick. You can go ahead and backtest this trick a bunch of times. So this could have been another entry right here. Now I will take you through the breaker block entry, and for this entry I will need to move a little bit forward so that we will be able to tell the difference afterwards between an impulsive, a very impulsive, let's say, break of structure and change of character, and this is the only way where you can use the breaker block. You cannot use the breaker block on every single break of structure. You will understand immediately where this one happens. And I will scale down on a lower time frame, such as the 1 minute time frame, because I want you to pay close attention to price action as I'm running price action right now, and you will instantly be able to tell which is a good price action movement in order to identify your breaker block. So let's move more forward. You will be able to understand with me. This is the best way to learn, and then I'm gonna teach you as well. I'm gonna go through it step by step. There we go. We were a little bit fast. Okay, there we go. Right here, you will then be able to compare this price action with all the other price action that we saw until here. Now we are going through the breaker block part 2. Compare now this break of structure right here and these candlesticks over here. Okay, those candlesticks, compare them with any type of break of structure before it. Is this one, is it even close to this one? Not at all. Plus here, what you have to see is that we grabbed liquidity. Okay, 2 grabs of liquidity. Actually, if I take you back in time even more, is this the same as this price action? Not at all. Okay, and I will show you the breaker block. Do not worry, just be a little bit patient. Is this one, as you see it right here, even remotely close, this thing right here, remotely close to what happened right here after this grab of liquidity? Of course not. So now, when and only when we see this exceptionally impulsive move, only then I want you to trade the breaker block. As I showed in part 1 of how to trade the breaker block, this is now this area down here. I will show you which area. This area down here, which many people saw as a change of character and placed their buy limit orders here, and from which we saw only a very minor reaction and then again a strong break of structure below it. This now becomes our breaker block. So the failed order block in this occasion is this whole area right here. Okay, this down move before the up move, which tricked those traders into placing buys exactly right here, let's say, with a stop loss below, and then it broke impulsively again below. This now becomes the breaker block. There you go. Here is where you would be placing your sell limit order with a stop loss right above this breaker block, or you can do it right above this area to be even more safe. Let's just see how we got activated into this trade. Okay, let's move forward. There you go. Price comes back and retests this one. You see that even if you would have your stop loss above this area, you wouldn't be stopped out because this is the proper breaker block. And now I'm gonna extend this one and show you the reward to risk that you can go for. You could go for first profit down here. Okay, there you go. This is the breaker block. When you are able to identify those extremely impulsive movements, such as the one that we saw here, which is totally different compared to those other movements such as this one, these you can tell apart, only then you can trade the breaker block with way higher probabilities of winning a trade, and you can go for extremely huge reward to risk. Only this movement until here could have made you an 11.6 to 1 reward to risk. Let's just extend this one. Now you would have placed your stop loss to break even though you don't need to do that, and see how long this ran for. And you see we are exactly right here at this specific point in time. Now we are in current price action. So extremely powerful concept. Today we learned 2 tricks. Besides the breaker block, I taught you that when you have an instance such as this one, where you pay close attention to details and you see that there is a small fair value gap right here and another fair value gap on the right, then price, when it retraces, it comes exactly most of the times and taps into this first untested fair value gap. Secondly, I taught you that in order to trade the breaker block, which is a failed order block, what you need to do is to go ahead and check out a very impulsive break of structure such as this one, which preferably has also grabbed liquidity in the past, and then you can go ahead and trade this failed order block from which people were tricked into placing positions opposite to the real movement. So in this occasion, they were tricked into buying until here, let's say, you use this failed order block, which is the breaker block, placing a sell limit order in this occasion at the bottom of this breaker block and the stop loss on the top of the breaker block. Then you can go ahead and target an area from a higher time frame, such as the 15-minute time frame. This is information that you can find only here on ChrisFX, and if you want to take your trading a step further, because trading is not easy as people want to tell you, and if you don't have a mentor, the possibilities of you succeeding are very, very little. So check out the ChrisFX Academy. And if you want to check out my trading signals as well, you can go ahead and click the link down in the description and get instant access to ChrisFX and perfect your trading once and for all. This is gonna do it for today, traders, and thank you all for watching. Until next time.